Good evening. Ira Epstein with your Spider Stock Market Wrap-Up. ETFs included in that as well. For this Monday, and we're at the 17th of April, 2023. Tomorrow's tax day. Be sure you pay attention. But we have other things to be looking at. A lot of earnings coming out. The markets got rescued today in its own way when Charles Schwab's numbers came out. I didn't think they were stellar, but they didn't get hurt the way State Street Bank went down nearly 10% today on theirs. Schwab ended up about 3.9% on the day. And part of what they did is they did go to the discount window. They've taken in about 40 some odd $1 million. They claim that they're not going to keep that money. What they're going to do is not do share buybacks. They're going to use that type of money to get through right now the if you will, the stress that's on their portfolio of securities. Obviously, if customers keep coming in, want cash back, what happens? They got to sell them, face value from where they're at. When they bought them, probably in loss. They got to make that up. They got to keep their regulatory capital in place. So they've made their arrangements for that, and they're prepared for a storm. It may never come. If it doesn't come, they get rid of that money. Now, tomorrow we're going to get Bank of America, Goldman Sachs. We're going to get Netflix, United Airlines, and I think Lockheed. I think those are the ones that are reporting, the major size companies that are reporting. We get reports now right on through. You're back into the season. What we've seen is the medium tier banks are the ones that are getting their deposits taken out on them. I don't consider Schwab a bank per se. They're a brokerage company. Certainly Goldman is a bank, and Bank of America, clearly a bank. So you've got all that going. We'll see what happened with them. The big boys, what we saw last couple of days has been they have gotten money. JP Morgan, great example of that. So you look at that and you try to figure out, okay, what do I do next with everything? I don't know why the Disney number didn't come in, but Ron DeSantis is going after Disney again. I don't understand this battle. It seems to me more of an ego battle than something good to help people. I think he's getting into the Trump mode. It's not going to be good for him. So why not just stay away and find a way to resolve your issues? But you're seeing here like TLT, the market down because interest rates climbing again. You're seeing that. You're watching the 2-year. They're on the way up, but they're all getting into oversold territory very, very quickly. So you got to pay attention to that part of it. Now, when we look at Netflix, and I put this up this week, and we'll stay with it because they're reporting, and I think we're all wanting to see just what is going to happen here. Cable companies have gone back and forth. They had, Love is Blind last night, blew up on them. So many people went in to see it, they blew the system out. That's not a bad thing. It's a bad thing that the system couldn't handle it, but it's a good thing proving to you they have a heck of an audience, and that's what's occurring. The show is, as I understand it, on now in a recorded, not live version. But when you take a look at, and no, I don't watch that, lower highs, lower lows, bearish. The market's fighting a battle right at the key number, the 18-day average of closes. It still has a bearish bias. The first support, if it drops down, is the 100-day average, way down under that. $50 lower, $40 lower, whatever it is, 40 some odd dollars, is the 200-day. More likely, the other support will be the Bollinger Band, and that'll jump in the morning the way that the trajectories are going a bit, but not dramatic, is my opinion. So if it continues down and the numbers are bad, something in there. We'll be looking at subscribers. You know that. That's going to be a big part of it. And what happened here? If you understand the slow stochastic, with the Bollinger Band, the game unfolds, all right? Nobody can win every trade. That doesn't exist. But what you're trying to do is when you're wrong, come out with decency. You're not hurt. You're moving on to trades that you hope will work. Well, when I look at this number and we come back together, let's see if I can get this to work. Yeah, it is. There we go. Watch. Here you have an embedded reading. Both numbers are still over 80. They're not. What do? Where's the market going? Most likely right into the 18-day average. You have to be, in my opinion, skedaddled. Go on. Let the market do something else. You'll say, Ira, it's coming back, and I'll go, sure it is. Bingo. Sometimes you can get out okay on these things. And the work was telling us that momentum often leads price. I cannot use to you in all good conscience the word always, because it's not accurate. I've seen price lead momentum at times, all right? Especially when you get a change of event the market wasn't prepared for. All of a sudden the market goes galloping. Think of when OPEC announced on the oil. Price went. Momentum didn't call that maneuver. But you get these type of maneuvers, it certainly is, in my opinion. And that called that you were going to get down there to that 18-day average and that you'd already lost the momentum. It suckered people in going, that was the break to buy it. And it wasn't the break to buy it. In Schlumberger, and I'll get rid of this sooner rather than later, my problem is this. When a market makes a first challenge of a 100-day average or a 200, it's a big number. Often it's a sucker play to try to buy over that number because the market will, at a minimum, try to stick to it most of the time. Not all the time, most of the time. That's what I've learned in my charting. Doesn't mean I'm going to be able to quantitatively prove it to you. It's what I believe. And if it corrects, back to the 18-day average. We'll see if that is in fact the case. The gasoline. Today, the game ended on this particular run of this trade. It was a heck of a great trade. The market took off, but what happened today? Well, tell me what happened. Here is the market on Friday. You have your embedded reading. Today, the market loses that reading. What's the number? 74. Game over. As far as I'm concerned, if I were your broker, I'm telling you, I think it's time that you cash in and we take another look at it when we get a different chart set up on it. The play occurred. Tesla, okay. Now there's only U.S. automakers left. Are you aware of this? Only U.S. automakers are left to get the U.S. tax credit. And not all of them can get the 7,500, not all models. Some get 3,750, some 7,500. And these things are phasing out. I'm not saying that the electronic industry is mature yet. I'm not convinced they should phase out. I think in order to get people to buy this, they need these deductions, if they will, from the purchase price. Now, what is also happening is Tesla is forcing a heck of an uproar. China, Europe, Renault. I'm reading different manufacturers around the world that are Volkswagen. They're lowering prices to meet the Tesla competition. As Tesla keeps dropping their price, it's affecting what they can do. Tesla's been making money, I think. We're going to find out. We're going to find out how many units, everything with this earnings report. It's going to be very important. But I think they are. The others are struggling at best. They make money on their combustion engines. I don't see any really even breaking even on electric. So Tesla's got them by the you-know-what, and they're playing the game. You're very much in sideways action. I have no idea what the numbers tomorrow are going to show. In XLF, you're up to an area embedded where the market is running the upper Bollinger Band. You'll get over it, you'll get back under it. That's what typically happens. I'm expecting a problem between here and the 200-day average of 33.78. Now, let me tell you what is amazing to me. We keep talking higher interest rates, banks in trouble, and yet the financial market is running. Generally speaking, generally being the key term here, higher interest rates go, the better banks do. There's a spread on the money. We know that banks are going to, certain banks at least, are going to have to pay up on their CDs or whatever to attract people. I'm not convinced the big boys have to. You want the peace of mind that they're too big to fail. Mid-tier boys, they want to get you $250,000. Do yourself a favor. Make them pay for it. They want that money, get your interest out of them. In XLI, did you see the Empire State readings today? I almost fell out of my chair when I saw the reversal in New York as to what's going on here. Industry has definitely picked up. Is it a flash in the pan? I don't know, but it certainly picked up. This chart's got the same problem that I keep having. You get to that 100-day average. In the past, if you've bought over it, you've been hurt pretty fast. This isn't part of that. Here the market had been under it for a long time. This is when you get back under it and the first time over it again. Got the difference there? So now the question is, if it can get over and stay over that for a bit, then actually this all becomes support between there and the 18. You're not quite there yet, as from my understanding of the chart. In the semiconductor, still in the bear phase right here, you can see you've got the lower highs, lower lows. Haven't quite gotten down to the Bollinger Band, and you may not. The market's having trouble doing it. You're already getting into the area where you're oversold. Any reading to me under 30 in the slow stochastic is oversold. In XHB, I heard a whole dissertation today on the home builders, and it was, I believe, on CNBC, and it was wonderful. The analyst was brilliant on it, and he was saying very much what I've been telling you, except in a better way. And he was explaining that the big boys, they have enough money where they're doing their own financing. They don't have to run to the banks the way that the middle-sized builder has to. And this is why the big boys are doing so well. They can go out and build the spec houses. Remember what I said, you can build 3, 4 homes, whatever it is, you show people, they give you a deposit, you keep going. I don't know that they're building big tracts, but he was on the same identical path I was, where you're not showing them blueprints of something and it's not built. You're going into different models of these homes. They've got them built, they're ready to go. They can get them to you in fast way because they have the funds. They're not having to run to the bank the way that the middle and smaller contractors are. My sister-in-law is using a middle contractor in Florida to build now. And they're already behind, I think, 6 months, 5 months, and they haven't broken ground yet. It's exactly the problem, in my opinion, not theirs, but in my opinion, that this contractor has. It's probably one of the smaller builders, a good one, but one of the smaller tier versus the others. And these things take time, and he's got to get his ducks in order. XLE, look at how you're fighting at that first challenge of the 100-day average. You are embedded. I swear, I've been telling my clients, I go, I know it's embedded, but I have another rule that fights. And when the two clash head on, guess what? There's always another market to trade. Why do anything with it? In the metals, you never did embed. You just stayed overbought and you fell back here. SLV, you're on the verge of losing the embedded reading, or did you lose it? You lost it. And unless it gaps sharply higher, it's going to lose it even more, even on a steady opening. It's the way the math works on the slow stochastic. You could be setting the market to come back over here to the 2233 level to take another fresh look at it. In the copper market, embedded up to the upper band on pullbacks. The trade, in my opinion, will keep buying this on the pullbacks until you lose the embedded reading. This is a market that got over the 100-day average and stayed over it in long enough where you have to say, nah, game over. And then you had a bullish crossover. What do I mean by that? Take a look with me here. Watch the red line in the 100. This is called a bullish crossover. It's when the red's going to get over the green. You got over that number. You fought your battle right here. And then it got over, and I kept going, well, I can't tell my clients to buy a Bollinger Band. And is it embedded? Then it finally embedded. And then this occurred with the crossover. And I'm going, this market's got people caught, and that's it. Now, there's an interesting story tonight in Dow Jones Newswires about Peru and how much copper is on the ground there. It's like 85,000 tons. There's enough copper, they can't get it out of the country through the end of the year if they could use all the facilities they have to get it gone. Remember, they've had the indigenous problem, they've had electric problems and everything. The mines kept going and the copper's there. Well, that's created tightness. Being there isn't where it's needed in the factories, right? It's a whole different world. So, different type of problem. Getting it out of there, costly proposition as well. So got to think these things through. And while the supply, we know where it's at and there's plenty of it, it's not in the market. And that's part of what's keeping this up. And stories like that are bullish, not bearish. In TLT, well, we're going into the FOMC meeting. So I would not be surprised that the market wants to get to a Bollinger Band. If you take a look at where the market stopped against on Friday. You came down and it respected the 100-day average zone. Today it probed, well, I'm sorry about that. Today it probed that zone. That's what it's doing. Next stopping spot here, oversold. I don't think the pros are going to push this and push it on the downside. They're not going to buy it, but I can see covering of shorts. In the dollar index, you're at a very interesting spot. You have a higher high and a lower low, and you're caught in narrow Bollinger Bands, and you've worked out of an oversold condition. You're already gone from it. The question is, what's next? Last, FXE got up to the Bollinger Band. Again, I want you to study that. You're not embedded. You get to the Bollinger Band, boom. The pro trader, I think, steps out. He's got his programs in and away he works with it. So learn that. And by the way, if you're watching this channel, you see the word join on the bottom. I think it's over on this side, actually. If you do that, you can join me in the morning in my morning webinars as well. If you want to learn the Bollinger Bands, it's so simple. I teach it in, I think it's 15 chapters. You get my charting software, so it does the same thing, and I have the old data in it. And then I let you join me for 2 weeks on a free trial to see me on the ETFs and the morning futures videos and get my writings all for 2 weeks thrown in with it. The course is inexpensive. You're going to be able to get through it and master it in probably 3 days, not all day long. Each video chapter, 10 minutes or so? So you don't have very, very long in there. You will get this, and then you keep doing it, and I keep reinforcing it, and away you go. I hope you end up with me as subscribing to what I do, because I'll keep you on the true path with it, and that's my job, to make sure that you stay with the disciplines. In any case, I'm Ira Epstein. You can click up here to get to the courses. You have yourself a good day. I'll see you tomorrow. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software, so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.